Ushasi, Assistant Professor, Department of Studies and Research in Commerce, Karnataka State Open University, Mysore. I have brought you an important topic for the discussion today is the old tax regime versus new tax regime. So as everyone is having a difficulty in identifying which tax to be considered, whether the old tax regime or the new tax regime. So here I have brought you this topic for the discussion. So let us discuss in detail about this old tax regime and new tax regime. So in the year 2020, Union Budget 2020, they have brought this new tax regime. Earlier to that, we had only one type of tax rate with a slab, different types of slabs. Having higher the income, higher will be the tax rate. Lower the income, lower would be the tax rate. But from the year 2020 onwards, we had got an option to pay the tax. So central government, with this introducing of new tax regime, they have given an option for the individual to pay very less tax by considering the new tax regime. But still we have confusion to consider which tax, whether old tax or new tax. Let us discuss that in detail. The Budget 2020 introduces a new regime under Section 115 BAC of Income Tax Act of 1961 for an individuals as well as for an HUF by giving an option to pay the income tax at lower rate. So with very fewer exemptions, where earlier to that we had various deductions and exemptions, but by paying very less rate of taxes, very less taxes with very minimal exemptions and deductions to claim. So that is called new regime of taxation system which came into force from the financial year 2020-21. As I said, it was introduced in the year 2020 in the Union Budget. Let us now understand what is this old tax regime and the new tax regime with various concepts like scope and the rebate available, different types of tax rates, what are the deductions available under these two regime, new system of and old system of taxation. So this scope, so here the old tax regime is very complex. We were thinking that it is very complex because of the various amendments keeps on changing every year, which would be updated every year in the Union Budget with various provisions and various types of taxes, surcharge, cesses imposed on with the higher rate of taxes. But under this old tax regime, the very important one of the benefit of this old tax regime is available of deductions and exemptions. Whereas when come to this new tax regime, this introduces to simplify the taxation system by making the taxpayer to pay taxes by calculating in a simpler way, and it is very easier to calculate and also to understand as well. But this new regime of taxation which offers with a very less rate of taxes, but this new regime of taxation is having very minimal deductions and exemptions, where the individuals who are opting this new taxation regime need not to go for investment and need not to go for making more and more savings. So without having investments and savings also, they can able to pay the taxes at a very lower rate. This is one of the benefit of new tax regime. So but this old tax regime is mainly benefited to the high income earners, those who earn more income. This old tax regime is benefited, but new tax regime is benefited to the individuals who is having very less investments and savings. Those who invest very less in the tax saving schemes, for them this new tax regime is very much benefited. Further, let us understand the very important tax rates. As I said earlier to 2020, we had only one type of taxes with the different slab rates, but now we have two different tax rates with the slab rates as well. Here the new tax regime is having a different tax rates, whereas the old tax regime and the new tax regime is also having a different tax rates. But this, as I said, is benefited mainly to the high income earners, whereas this is benefited to those individuals who are not having other investments. Let us understand with what slab rates, what is the tax rate. Okay. So, under the old tax regime, up to 2.5 lakh rupees, no need of paying any taxes. That means the tax rate is nil up to 2,50,000 rupees. Whereas, from the slab rate of 2.5 lakhs to 5 lakh, 2.5, that is 2,50,000 rupees to 5 lakh rupees, the tax rate is 5%. Whereas from 5 lakh to 10 lakh, it is 20%. Okay. Directly from 5%, it is increased to 20% for the slab rate of 5 lakh to 10 lakh. Whereas more than 5 lakh, it is 30% tax rate. Those who are having an income of more than 10 lakh rupees, irrespective of the levels after 10 lakh rupees, they have to pay the tax rate at 30%. Whereas under new tax regime, we have here 6 slabs. Under 6 slabs, we have a different tax rates. Let us understand what are the tax rates under new tax regime. Up to 3 lakh rupees, it is nil. So, those who earn an income up to 3 lakh rupees need not pay any taxes, whereas under old tax regime, it was 2.5 lakh. Okay. Next, 3 lakh to 6 lakh, it is 5%. So, from 3 lakh rupees to 6 lakh rupees, it is 5%. 5% tax need to be paid, whereas under old tax regime, up to 5 lakh rupees, it is 5%. If exceeds 5 lakh, the individuals must have to pay, the taxpayers must have to pay 20% tax rate. But here, up to 6 lakh rupees, it is allowed at 5%. Whereas from 6 lakh to 9 lakh, so again the slab is divided between 6 lakh to 9 lakh. It is only 10%. Whereas under old tax, up to 10 lakhs, it is 20%. But next further, from 9 lakh to 12 lakh, it is only 15%. But under old tax, if exceeds 10 lakh, irrespective of the income, more than 10 lakh, the taxpayers must have to pay 30% tax rate. Whereas here, more than 12 lakh, up to 12 lakh, more than 9 lakh rupees, the taxpayers must have to pay 15% tax rate. Then further, from 12 lakh to 15 lakh rupees, the taxpayers can pay the tax rate with 20%. Okay, but more than 15 lakhs, if the taxpayers are having more than 15 lakh rupees, then they have to pay with the tax rate of 30%. This is what the differences between old tax rate and the new tax rate, where we will get confused with this, whether to consider the new tax regime or the old tax regime. By looking at this tax rate, we feel that this tax rate, new tax regime, is very benefited for all the taxpayers, and the old tax regime is having a higher rate. But still, the old tax regime is also having some of the benefits. Let us understand further. Okay, this is a rebate. Rebate under section 87 of the Income Tax Act of 1961, it is provided to all the individuals who are having very less income. Okay, so those who have a very less income, up to the slab limit it is specified, the specified tax limit, that the individuals need not pay any taxes. Let us understand what is the rebate available under old tax regime as well as under new tax regime. So first, under old tax regime, the tax rebate as per income tax, it is allowed for an individual up to 5 lakh rupees. Those who earn an income, it is just only earning an income, the taxable income after giving all the deduction, if the individual is having a taxable income of 5 lakh rupees in the financial year 2024-25. So here the present financial year for the income earners is 2024-25, starts from 1st April 2024 and ends on 31st March 2025. Those who earn an income between this period called as financial year 2024-25 will get the rebate up to 12,500 rupees. Up to 12,500 rupees of rebate they will get. Who will get? Those taxpayers will have a taxable income of 5 lakh rupees, up to 5 lakh rupees. If they have taxable income of 5 lakh rupees, 5 lakh 1 rupee also, they have to pay taxes as per the slab rate which we have specified earlier. Like this is the slab rate. As per this slab rate, if they opt old tax regime, so if they have more than 5 lakh rupees means with the slab rate up to 2,50,000 nil, 2,50,000 to 5 lakh rupees. That means the difference of 2,50,000 for which they have to pay at 5%, and if it is more than 5 lakh and up to 10 lakh rupees, 20% they need to pay tax. Whereas if they have 5 lakh rupees, only up to 5 lakh rupees, if their income, the taxable income is 5 lakh rupees means they will get the rebate, means deduction. They can claim this as a deduction of 12,500 under section 87A. This was the benefit available under old tax regime for those who are having less income. Whereas here under the new tax regime, as I said in the beginning itself, it is mainly benefited for the very less income people as well as those who do not have investments and savings. Look at here, from the financial year 2023-24, this under old tax regime, the maximum rebate of 25,000 rupees is allowed if the income of an individual, the taxable income of an individual is below 7 lakh rupees or is up to 7 lakh rupees. If I am an income earner, if I am earning an income and my taxable income is 7 lakh rupees means I can claim a rebate of 25,000. This 25,000 rupees of rebate can be claimed by the taxpayer if they are having a less income up to 7 lakh rupees. This is a benefit those who opt new tax regime. Next, further, let us understand what are the deductions available under old tax regime as well as new tax regime. This is one of the very important thing we need to stress upon. Why? Because here earlier we had a mindset that we have to reduce, in order to reduce the taxes, we need to make some savings by investing on LIC, PPF, PEF and also health insurance, etc. So we were having this kind of mindset because those deductions were allowable for the income tax. By giving those deductions, our taxes would come very less. But now what happens if we do not have that investment? We need not to break our head. So we need not to go for making some investment. At the end of the financial year, what happens if March comes or February comes? So the tax deductor, those who the employer will be insisting us to make more payment of taxes, otherwise make investments and come to make the less taxes. To reduce the taxes. But it is very difficult for us to invest the amount at the end of the financial year, because that needs very huge amount of investment. Just for the purpose of reducing the tax, we need more money for an investment. So that is very highly difficult for an individual. So this new tax regime is benefited. Let us understand what are those deductions allowable under old tax regime as well as under new tax regime. So first, old tax regime, as we all already aware of that, under old tax regime, various deductions and exemptions are allowable. So the deductions can be allowable under section 80C, 80CC, 80CCD, 80D, 80E, 80F, those deductions 80E. So various from 80C to 80U. We say that deduction is available from 80C to 80U for an individual. So within that group we have various deductions. Mainly as an individual, what we do, we go and invest in the LIC, we go and invest on the provident fund or the mutual fund in the share market, or we also go and invest in the PPF, and also we take a claim of tuition fees of children. So like this we go for making various kinds of deductions considering those savings. But here these are the taxes, deductions available under the old tax regime, like HRA also available, 80D, health insurance premium also available, interest on housing loan is also available, and also if we take any interest, education loans, interest on education loan is also available, contribution to the donations available under section 80G. So like this various deductions available. So those deductions, those who are having more savings and investments can go for claiming these deductions. That is, under 80C we can claim up to 2 lakh rupees, up to 1,50,000 rupees, including NPS we can claim up to 2 lakh rupees, and 80D it is up to 25,000 rupees. Like this, where is a slab, fixed rate which is defined by the Income Tax Act. Okay, but when come to this new tax regime, those who do not have an investments and savings or having a minimal investments or the savings can go for this new tax regime. So these new schemes offer minimal deductions and exemptions. So as I said, this gives only minimal deductions and exemptions, not all the deductions and exemptions available. Let us understand what are those deductions available under new tax regime. So as it says, most of the traditional deductions available such as 80C, 80D, HRA and etc. are not allowable, are not applicable here under this new tax regime. So this under new tax regime as specified, only minimal deductions and minimal exemptions are allowed. Let us understand those minimal deductions and exemptions. This is very benefited for the new income earners, very less income earners, and as well as those who do not have savings and investment. And it also very simpler taxation system, because it does not consider more exemptions, deductions, etc. So let us understand those deductions allowable under new tax regime. Interest on housing loan on only let out property. See, earlier under old tax regime, all the interest on housing loan, principal amount on the housing loan was allowable. But here under new tax regime, principal on housing loan is not allowable as deduction. Only interest on housing loan is allowable, but that too if the house property is let out for rent. On that property, if any owner has taken a loan, that interest on housing loan is allowable as a deduction. But interest on housing loan on the self-occupied property is not at all allowed. Further, deductions for employer's contribution to NPS account. So, employer's contribution under section 80CCD subsection 1. This is allowed, whereas earlier to this, that means in the old tax regime, actually employer contribution as well as employees contribution. Both contributions were allowed as deduction under section 80 CCD. Whereas now only employer's contribution is allowed but not the employee's contribution. Further, 50,000 rupees is allowed as standard deduction from income from salary. Even it is allowable under old tax regime as well. This is called standard deduction for the employee. Those who earn a salary income, for them this standard deduction of 50,000 rupees it is allowed under old regime as well as under new tax regime. Then further, for pensioners including family pensioners, rupees 15,000 can be allowed as deduction. So family pension 50,000 rupees is allowed as a deduction under new tax regime. Then further, conveyance allowance received to meet the conveyance expenditure, like for meeting the transportation expenditure, conveyance expenditure we say. Okay, for meeting that expenditure, if any expenditure incurred by an employee or an individual, that can be claimed, that too for an official purpose. Next, all contribution, particularly this very important, all contributions to Agniveer Corpus Fund, it is introduced newly, Agniveer Corpus Fund under section 80 CCH, Agniveer Corpus Fund. Whatever the contribution towards this 80 CCH, that is Agniveer Corpus Fund, then completely this deduction is allowable. Then deductions for additional employee costs, those who do a business, an individual who are doing a business and earning a business income, for them this deduction is allowable under section 80 JJA for allowable as a deduction of additional employee cost. Next, transportation allowances in case of specially disabled person. So for the specially disabled person only transportation allowances are allowable. Next, daily allowances received from an employer to meet the ordinary regular charges or expenditure which incurred on account of absence from his regular place of duty. Say for example, if an employee is transferred to any other places and for meeting that transportation expenditure for an official purpose on official duty, so that expenditure received from an employee can be allowed as a deduction here. Only these kind of deductions allowable under new tax regime but not all the deductions, whereas old tax regime is having more deductions where we can claim more exemptions in that. Now let us understand which is the default tax scheme. So earlier to 2020, as we had only one type of taxes, we had not had an option to decide whether to go for old tax regime or to go for new tax regime. So we were not supposed to decide. But now we have to decide by calculating which taxes to be considered, whether new tax regime or old tax regime. So if we consider old tax regime, whether we get less taxes, or if we consider new tax regime, do we get less taxes? By knowing all those, by determining by considering all those concepts which we have explained right now, so we will go for old tax regime or the new tax regime. But this old tax regime from till the financial year 2022-23, old tax regime was the default tax regime. So whether you decide or not, old tax regime was the default regime. So if we want to go for the new tax regime, we need to give updation to the employer that I am going for considering this new tax regime. Earlier till that time, till the financial year 2022-23, old tax regime was the default tax regime. But from the financial year 2023-24, that is from the previous year, that is from the previous financial year 2023-24, this new tax regime has made a default regime. Whether we go for old tax regime or the new tax regime, default, this new tax regime will be considered by an employer, those who deduct the tax or those who give form 16 or 16E. This new tax regime will become the default regime. But if we want to go for opting the old tax regime, then we need to give a declaration in the form 10IEA. So that Form 10 IEA to be filled and that declaration to be submitted to an employer if in case the taxpayer or an individual who are opting old tax regime. Otherwise, new tax regime will become a default. Next, now let us understand set off and carry forward of losses in this both new tax as well as old tax. As we know, this set off, that means in case as we have a different 5 heads of income, starts from income from salary, income from house property, income from business or profession, capital gain, income from other sources. These are the 5 heads of income we have. Under the 5 heads of income, if there is any losses other than, there will be no losses from the salary income. Other than this salary income, all the 4 heads of income can leads to a losses. If that is the cases, the losses incurred from house property can be set off against the profit from business or profit from capital gain. Like this way, if there is any losses from business, can be able to set off under the losses from, income from house property. Set off in the sense adjustment. Adjustment can be done within the head or between the head. So that we will discuss, that we discuss when we do the set off and carry forward of losses. But here this set off and carry forward, in case if this set off or the adjustment is not allowable in the current financial year, then it can be carried forward and for the next financial year and can be set off also. And some of the losses can be carried forward up to 4 years, some of the losses up to 8 years, and some of the losses, say for example unabsorbed depreciation or unabsorbed scientific expenditure, can be able to carry forward for n number of years till it gets set off, till it gets adjusted. So like this we had under old tax regime, and even now also under old tax regime it is there. The set off and carry forward of losses from all the heads, within the head, between the head, and carry forward of losses, it is allowable under old tax regime. Whereas the new tax regime, under new tax regime, only some of the losses can be able to set off and carry forward. Not all the losses allowable for set off and carry forward, only few losses allowable. So let us understand what are those few losses allowable for set off and carry forward. First one is house property losses, which is not allowable for set off with any other heads of income. So, but this house property losses under old tax regime can be able to set off with all the for all the other 4 heads of income, even within the same head as well as between the heads, like income from salary, income from business, capital gain, as well as income from other sources. All the 4 heads, this loss can be able to set off. But here under new tax regime, this house property losses cannot be set off with any other heads of income. Further, carry forward of depreciation from earlier assessment year to set off is not allowed. But under old tax regime, this is one of the very big benefit for the businessman under old tax regime, that this unabsorbed depreciation which cannot be set off during the current year business loss, this can be carried forward for n number of years until it gets adjusted. But here under new tax regime, this depreciation, unabsorbed depreciation, that cannot be carried forward for set off. Next, further, additional depreciation under section 32 cannot be claimed, whereas under old tax regime, additional depreciation at the rate of 20% is allowed as a deduction. So along with the normal depreciation, this additional depreciation for those business who purchases the plant and machinery for the current year, that too a new purchase of plant and machinery, this additional depreciation could be claimed by the business at the rate of 20% as an additional depreciation under section 32. Whereas this new tax regime, under this new tax regime, this additional depreciation also not allowable. Next, further, the carry forward of deduction under section 35, that is scientific expenditure, subsection 1, class 2, subclass 2A, and section 3, subsection 3 as well. So these are the deductions, and also further section 35 AD, that is capital expenditure. Expenditure on capital assets. Next, section 80 JJA, that is additional employee cost. All these are the expenditure, unabsorbed expenditure cannot be carried forward, but all these unabsorbed expenditure on scientific research, unabsorbed expenditure on capital assets, unabsorbed expenditure on additional employee cost, all these were allowed under an old tax regime, but it is not allowed under new tax regime. So this is about set off and carry forward of losses. Finally, let us understand the surcharge under these two different regimes. Okay, so what is the surcharge? Surcharge is nothing but tax on tax. So on the tax which we calculate, so if the incomes of an individual exceeds 50 lakhs, that surcharge on the tax rate at the rate of 37.5% need to be paid by an individual. This is under old tax regime. So this is very high rate of taxes on tax is applicable under old tax regime, whereas under new tax regime the surcharge rate is only 25%. Up to only 25% is payable if income of an individual exceeds 50 lakh rupees. So these are the various differences between old tax regime and the new tax regime. So far we have discussed. So I'll repeat once again, I'll just conclude. Under the old tax regime, we had different slabs rates starts from 5%, 10%, 20% and 5%, 20%, 30%, whereas under new tax regime, we have slabs rate from 0%, 5%, 10%, 15%, 20% and 30%. Like this, we have a various slabs rates. There are benefits under old tax regime as well as under new tax regime. We have both benefits, drawbacks as well as advantages under both new tax regime as well as old tax regime. But those who opt old tax regime or those who opt new tax regime always will think of reducing the taxes to pay less taxes to the government. So before opting for this old tax regime or the new tax regime, one must have an idea of what is old tax regime and new tax regime. So we have discussed. I hope this video had made you a clear understanding of this old tax regime versus new tax regime. Thank you.